What's going on, everybody? Wanted to hop on today and talk about the trade that I took this morning on Nasdaq. Caught a nice long before the sell-off. Caught a long for about 100 points. So I just wanted to walk through everything that I was looking for, from pre-market analysis to trade entry, trade management, and exits. Without further ado, let's get into it. So, like I said, took a long this morning. Really wanted to focus on as close to 10 a.m. as possible, just because I've been noticing that price action does clean up a bit around that 10 a.m. time. So I wanted to allow some liquidity to be built before executing. This is the daily chart for Nasdaq. Nasdaq has previously reached its all-time highs and kind of just been hanging out near it. You can see we have our weekly open. We immediately expand higher into that all-time high area, and we still have these clean, relatively equal highs as the dollar index is moving lower towards its relatively equal lows and respecting its daily SIBI before we came into the market today. So I was expecting some form of higher prices, so I wanted to be buying beneath opening prices. This is our 4-hour chart right here. We can see that price, this blue line is annotated, is our all-time highs. And we open this week, move higher, take out this buy side liquidity right here, and then we rebalance back into this 4-hour order block that at the time of the New York Open, price was respecting it. So I wanted to see a bounce from this area of support while we hold bullish structure on the 4-hour chart. Dropping down to a 15-minute chart, we can see that we have our 7 a.m. New York Open. During the overnight session, NQ rallied higher without sweeping the Asia sell side liquidity during the London session. So what I want to see first before price continues to move higher is a sweep of the Asia sell side liquidity. You can see right at market open, just before market open, we run higher, take out buy side, and then drop lower into this area of relatively equal lows. So now that these equal lows have become jagged, I like for price to run higher inside of this low resistance liquidity. So I wanted to, like I've been saying, I wanted to wait till after or around 10 o'clock to start executing really the 9:45 macro that starts, and then anytime after 10 o'clock, if a setup is valid, that's when I've been looking to execute, just to allow liquidity to be engineered beforehand, so then we have the opportunity to run it. This is the 5-minute chart on Nasdaq. You can see that after market open, we run up into this bearish order block right here, and then come down, take out these relatively equal lows. And then once we take out the Asia sell side liquidity inside of that 4-hour bullish order block that we had annotated earlier, that is when we started to find areas of support inside of here. And I wanted to see a run back to the post 8:30 a.m. highs, and then ultimate terminus being the buy side liquidity from this morning. You can see down here, after we sweep out this sell side liquidity, we have a lot of engineered buy side liquidity. We have buy side here, buy side here, buy side here. And notice the difference between this area right here and this over here. These candles are overlapping as bullish imbalances are being ran through and bearish imbalances are being ran through. But here, this is just a clean run lower. So once I see that we start to rotate a little bit higher, I'm expecting some form of run on buy side. And then right here, we have a 5-minute inversion for value gap with the closure through here before meeting that buy side liquidity post 8:30. We have our 15-minute rejection block that was right here that I was watching. We have a bounce out of the 15-minute rejection block, close through the 5-minute previous bearish fair value gap, making it an inversion fair value gap before running to buy side liquidity. Dropping down to the 1-minute chart, you can see that annotated sell side liquidity from the Asian session down here. 9:30 we open up, run higher into this mitigation, before expanding lower into sell side liquidity. And at the time when price was running lower into sell side liquidity, that's when I noticed that the dollar index was beginning to reject the daily bearish fair value gap that it had on its respective daily chart. So I was thinking that price would more than likely run higher into this buy side liquidity before possibly going lower. So I wanted to participate in this run higher as we were beneath the midnight open price, as we're beneath the 9:30 a.m. opening price, and as we're beneath the 8:30 a.m. opening price. So since we're in such a deep discount and below all of these opening prices, I'm not looking to short down here. I want to look for long opportunities in an area of support during key times. And a key time for me is as close to 10 a.m. as possible during that, preferably around that 9:45 to 10:15 macro time. If a setup comes at 9:45, I'll be looking to take it. But if it does come after 10 o'clock, then that's even better. But you can see that we have all of this low resistance liquidity. We have this high, this high, this high, the 9:30 a.m. high. So I'm expecting all of that low resistance to get ran. Now we have at 9:45, we have this gray box down here is our 15-minute rejection block after sweeping the internal sell side liquidity from the Asia session inside of the 4-hour order block. So we have some areas of support and also some reversal confirmations that are now showing. I'm looking to take an entry on an inversion fair value gap. This fair value gap right here is the one I used for my inversion this morning. We have a closure through it on this around this like 947, 948 candle. I wanted to see if this fair value gap that was inside of this inversion fair value gap would hold. So I waited for it to come back in, test. Notice the closures inside of this 1 minute fair value gap right here. The bodies are respecting the upper quadrant of that fair value gap and its inversion fair value gap, while the wicks are doing the damage below. I entered once we started to have some movement out of here, and then I took ultimate profit around the buy side liquidity from the 8:30 a.m. to 10 a.m. cycle, and then my stop loss got moved to break even, and I ended up getting stopped in profit. Here are my executions, annotated by the blue and red arrows. Like I said, we dropped down into the 15-minute rejection block after a run on sell side liquidity. Wanted to see some sort of movement out of this fair value gap and this inversion fair value gap, just to see that it was actually going to be respected, because the dollar index was a little bit shaky at this time. But so I really wanted to see if the dollar index was going to start moving lower out of the daily fair value gap, while the S&P 500 and the Nasdaq were beginning to get some momentum to the upside. At this time right here, the S&P 500 was all the way up here. So the S&P 500 had already proven its strength, but I really wanted to see some form of displacement and holding of a fair value gap on NQ before I entered here, just to get extra confirmation. But I entered once we got this displacement out. My stop loss beneath this candle that closed through the fair value gap, with a stop loss underneath of it. Putting my stop loss right there has really allowed me to risk less and also get higher RR. So when I get these long running trades, it alleviates and negates a lot of losers that I had before. And I've been trading like this for the past couple of weeks now, and it really has made a difference in my trading. One, because my psychology, I don't have to risk as much to gain as much. Like for this trade, I think I risked 150 for this trade and got around a 4.5 R for it. That stacked on top of multiple accounts is way more than enough at the moment. So this just really goes to show that you don't need to risk a lot of money to have decent winners. If you know what your entry confirmations are and you can have tight entries with tight stop losses, it allows you to risk less, get higher RR, and when you have a stretch of losers, one trade is going to negate pretty much all of those losers. So that's really what I've been working on. So moving forward, the midnight open was one of my targets. I exited my first partial right here, indicated by this red arrow at midnight open, just in case the dollar index started to grind higher as the dollar index or as the Nasdaq touched the midnight open. And then I left two runners for the 8:30 buy side liquidity and then the pre-market buy side liquidity. And this is where running down equity has been really, really good for me as well, where after we get this run higher above the 9:30 buy side, we have this slight retracement lower. Once we get back up here, I peel one off above this high, and then I had one left. So instead of taking it all off at this buy side liquidity, I really wanted to see if I can get an ultimate pull for that pre-market buy side level. And then I ended up moving my stop loss beneath this order block and this swing low right here, and ultimately got trailed out in profit. And I think my runner, the highest runner that I had, went to like 1 to 4.5 R, I believe. This is the regular trading hours. You can see we had a regular trading hours gap higher. I don't want to be a buyer up here since we're in premium. I want to wait for us to get back down beneath some sort of opening price to be a buyer in discount. So you can see that we have the regular trading hours gap. We open higher, and then this actually should be up here. This gap should be up here. We test the bottom of the gap. The bodies are kind of closing at the bottom of it. We have a run inside of this fair value gap and all of this consolidation before running higher and taking out buy side liquidity. You see we left these relatively equal highs right here on regular trading hours. So expecting all of this to get ran. Regular trading hours annotated on the 1 minute chart. We open up higher, leaving the relatively equal highs from the buy side liquidity before going lower, testing the regular trading hours gap, running out all of this relatively equal lows, sell side liquidity, and then we have a run on our 1 minute fair value gap. And then I already talked about the entries and the trade management. We're running down equities and then getting stopped in profit. This is our dollar index chart on the daily. You can see that we have these relatively equal lows right here on the dollar index chart, and we have this daily fair value gap. We have one right here and we have one right here, but this bottom one has been respected the past couple of days. So I wanted to see if the lower quadrant of it will be continued to be respected going into today. Getting into the chart this morning around 9:30 open, this candle was not this green. It was a bit more halfway. So I'm expecting a bit lower prices. As the dollar index is going lower, I'm expecting that to relieve some pressure on the S&P 500 and the Nasdaq for higher prices on those two assets. And this is the dollar index chart on the 15-minute chart. You can see that we have these relatively equal lows from yesterday, and overnight we had a run higher, and we started to respect that lower quadrant of that daily bearish fair value gap. The pre-market New York open at 7 a.m. We have this initial test of the daily fair value gap, drop down, come back up at about 8:30, taking out these relatively equal highs and then displacing lower. So when we get to the charts, when 10 a.m. comes this morning, I'm expecting a displacement lower on the dollar index, and as the dollar index displaces lower, I would like to see a run higher on the S&P 500 and Nasdaq. So we ultimately ended up sweeping out sell side liquidity and running higher. And as you can see, if you check the charts for today, once this run higher happens on the dollar index, the S&P 500 and the Nasdaq kind of did just roll over and kind of crap to bed this morning. So lessons from this trade, key takeaways from today is the dollar index rejecting lower quadrant of the daily SIBI allowed ES and NQ to rally higher. I say this in pretty much every single video now. The dollar index has helped my trading a ton because it really allows me to get market symmetry when I'm looking to check a trade on NQ. If I see that the S&P 500 and the Nasdaq are going the same direction as the dollar index, I know that something is up. That raises a red flag for me, and I would like to see more market symmetry. So this really does allow me to, one, take A plus trades and have like great confluence depending on what the dollar index is doing. Two, it allows me to filter through lower probability conditions. The second lesson, buying beneath all opening prices is the most discounted area we can buy at. So let's run back. We have our midnight open, we're beneath that. Our 9:30 open, that's near the midnight open, we're beneath that. The 8:30 open is right here, we're beneath that. And the 7 a.m. open right here, we're beneath that. We are in a deep discount. I'm not looking to short down here. If we're in a deep discount, we should be looking to long after areas of support, after key levels are tested, and vice versa. If we were above all of these opening prices and we were expecting lower prices for the day, we would be looking to short in areas of premium. But once we're in an area of discount, we're in this deep discount. I'm not looking to short down here. I'm looking for long opportunities. And then lastly, running down equity at valid points is always a great trick. It's always a great idea. So this is another thing that has really helped me, my psychology this year, is running down equity at valid points, along with the tighter entries and the tighter stop losses. After this entry right here, I run down my equity at midnight open. I believe this was at around a 2R. It might have been like a 1.8, 1.7. And then the rest of these trades up here are higher than 1.3. So running down equity will allow you to get precise exits, especially if you're possibly off sides. And also, you're never going to go broke taking profits. So that's something that has really helped me, along with being able to risk less with tighter stop losses and make more as I run down my equity, and allowing runners, my winners, to run. So overall, this was a great trade, great day. A lot of learning opportunities for long and short. Tricky markets that we've been in with the news headlines. I know there was a Fed speaker today testifying for a possible replacement for Powell. But all in all, still great opportunities. Caught about 100 points today. During these volatile times, it's really important to be wary of your stop losses, and just understanding what's going on in the markets outside of the charts, because you need to pay attention to these headlines. You need to pay attention to really what's just going on in the world, because you don't want to be offsides. And then being able to protect your equity while you're in a trade, and being able to do those kind of things. So overall, great day. I really hope you guys have been staying safe. And until next time, I'll talk to you guys later, and trade safely.